Welcome to the FSHR and Compliance Network webinar.
I'm Zoe Avenel, I chair the network, and I'm also Head of Marketing and Events at our co-sponsor, Veran Performance. I hope you're all keeping well and looking forward to the session. You may have read our latest announcement in the news regarding the network's new legal sponsor, Osborne Clarke, and I am delighted to introduce you to Olivia Sinfield, who is the Associate Director at Osborne Clarke. Olivia has spearheaded the relationship and has been working with myself and Tom Holmes from our co-sponsor to establish and plan informative events and add value to all of our members in their role as HR and compliance professionals. So good morning, Olivia.
Morning, Zoe, and thanks very much for having us today. We're really delighted to be joining you for this our inaugural event with you. I was thinking yesterday sort of long and hard about how I could introduce OC to an audience who may not have yet come across us, and I did think I could say that, well, we're an international law firm with 26 offices aligned to 8 core sectors, including financial services. But then I thought, well, that's all a little bit vanilla. So what I'll tell you instead is that if you create a word cloud of OC's homepage, then the key words which will flash up looming large are digital, which is mentioned 5 times, change and transformation, which are both mentioned 4 times, strategy also 4 times, and then a smattering use of words like evolve and tomorrow. And I think this sums us up really nicely as a firm who are really interested in what's coming down the pipeline for our FS sector clients, and now more than ever. So that's what's drew us to you at Veran and to the network, this opportunity to be future focused and hopefully provide some sector specific real value and insight for HR and compliance professionals. So thanks very much, really excited too.
Thank you, Olivia. Yeah, we're super thrilled to have you on board, and I'm sure that we'll meet further Osborne Clarke team members throughout the session this morning. But before I kick off, I'd like to remind you why the network exists. And essentially, we operate on sort of 3 key objectives. The first is to understand the impact that new and changing legislation on financial services businesses, to provide a space for industry peers to collaborate and share best practice under Chatham House rules. And the third, to promote a consistent approach to regulatory challenges across the industry as a whole. We are a not-for-profit organisation. We host several free breakfast seminars throughout the year, although these are currently operating online and will do for the foreseeable future. We have about 4,000 individual members representing more than 1,200 regulated businesses, and we are a growing network. And with this new relationship with Osborne Clarke, we're really excited to expand the network even further this year. If you do have any questions for those people that haven't been before, please do let me know. So moving on to the agenda for this morning, I'll shortly be handing over to Anna Perry, who is a senior knowledge lawyer within the Financial Institutions Group at Osborne Clarke. Anna will be providing a regulatory update. Her practice covers a broad range of financial services clients, including asset managers, custodians, investment platforms, and regularly comments on developments within the sphere of payments, funds, consumer credit, and financial services law and regulation, and has recently contributed to several industry publications and public consultations. We will then hear from Chris Ratcliffe and Prianca Patel on Brexit and passporting. Chris is a senior associate within the Financial Institutions Group at OC. I'm going to call it OC so it sounds cooler. And he advises on a range of regulatory matters, including compliance with FCA and PRA rules, relationships with the regulators, perimeter issues, managing regulatory change, applications to the FCA or PRA, the client asset regime, new product offerings, corporate governance, material outsourcing, and specialist transactional support. I hope I didn't miss anything there, Chris. It's quite a long list. And Prianca Patel is a senior associate within the employment team at OC and has significant experience of advising investment banks, asset managers, and fintechs on regulatory compliance matters, including SMCR, which is a sensitive topic within the group, senior level disputes and exits, investigations, business protection, restructurings, whistleblowing, and complex and high-value employment tribunal litigation. Prianca also has significant experience working in-house in an international investment bank, so that's pretty relatable to many of our members. Olivia Sinfield will then lead the charge on our panel session following those updates, featuring our long-standing network member, Phil Trevillion, who many of you may know from previous events. Phil is the SMCR Business Lead at Quilter. And joining him will be Tom Holmes, who is the Change and Technology Transformation Director at Veran Performance. And they will be discussing the current issue of whether businesses can force staff to be vaccinated. Please use the Q&A button to send in your questions, and we'll try to answer them as we go along. So if I ask all of the panelists to sort of keep an eye on the questions that are coming in to see if we can answer them as we go through the conversation. The session should take us to around 11 o'clock. Without further ado, I will hand over to you, Anne.
Thanks so much, Zoe, for the intro, and good morning, everyone. So in the next 15 minutes or so, I wanted to touch upon 3 recent legal developments which are a particular focus for the FCA, and then we'll wrap up with a bit of horizon scanning at the end and flag a few things which are coming down the pipeline, which are of key relevance to the audience here today. So the first thing I wanted to talk about was the FCA's finalised guidance on protecting vulnerable customers. So this really is a key focus for the FCA, and it's more important than ever due to the impact of COVID-19. So at the end of February, last month, at the end of February, the FCA published finalised guidance aimed at helping firms ensure that they're treating vulnerable customers fairly, and the guidance includes examples of how to put that all into practice. So essentially, the FCA wants vulnerable customers to experience outcomes as good as other customers, and to get consistently fair treatment across the sectors that the FCA regulates. And I think it's fair to say that while some firms have made significant progress in how they treat vulnerable customers, including in how they've responded to the pandemic, there have unfortunately been examples of others failing to meet the needs of these customers, which according to the FCA has led to some harm. So in terms of who we mean when we're talking about vulnerable customers, so it's someone who, due to their personal circumstances, is especially susceptible to harm, and that's particularly where a firm is not acting with the appropriate level of care. So vulnerability, it should be viewed as a spectrum of risk. I mean, all customers are at risk of becoming vulnerable, but it's increased by having certain characteristics. So this could be, poor health, life events such as, new caring responsibilities, a low resilience to cope with financial or emotional shocks, or, poor literacy or numeracy skills. So there's a whole spectrum of different characteristics that have to be considered. The first thing to say is that this new guidance is relevant to firms serving retail customers, and it includes some business customers, and that's regardless of the firm's size or the sector it operates in. As you will probably know, the FCA's principles for business already require firms to treat customers fairly, and this guidance makes clear what the standard set by the principles actually means in practice for firms, so that the firms can understand what the FCA expects. One of the key areas that firms should be focusing on is ensuring that their staff have the right skills and capability to recognise and respond to the needs of vulnerable customers. And so the guidance really goes into some detail about what that actually means. So it means that staff need to understand how their role affects the fair treatment of vulnerable customers. For example, if you've got staff working in product and service design or transformation programs, they should take vulnerable customers' needs into account as part of the design process or the transformation agenda. It also means that staff on the front line have to have the necessary skills and capability to recognise and respond to a whole range of characteristics of vulnerability, and they need to be able to do this promptly, so that the harm doesn't occur in the first place, or that it doesn't become more severe. They need to know how to, really listen out for information from the customer that could indicate vulnerability, and then seek information from vulnerable customers. And they also need to know when it's appropriate for them to seek additional support, such as, escalating a case to the next level, or seeking additional help from a specialist team, or referring to the consumer to third-party support. It's also important that firms make sure their staff are aware of any existing policies they have in place. And I think the FCA refers in the guidance to this as, the policy practice gap. And just to give you a flavour of the types of actions that firms might be thinking about taking in line with these guidance, and some of these you may have already implemented, looking to update any staff training to ensure that it gives staff an understanding of vulnerability and skills relevant to the role that they're actually in. It's giving staff opportunities to share their knowledge and experiences with colleagues. You might want to appoint a dedicated vulnerability champion or a team who can help discuss the more complex cases and then offer some support to those frontline staff. You might want to develop an internal how-to guide or a knowledge base on vulnerability that frontline staff can then refer to as part of their day-to-day role. If you're undertaking a sort of transformation program internally, you might want to consider whether you have a lead person who represents the interests of vulnerable customers, and then considers how those changes might affect that particular customer base. There's also the softer side of things, and that's making sure that frontline staff have the practical and emotional support that they need. So this might be offering self-help information, or time out following a particularly challenging phone call, or time for staff simply to share their experiences, either face-to-face in meetings or via online forums. So there are some of the practical things that the guidance points to around sort of staff and their capability. So moving on to the next development I wanted to talk about. So there are a couple of interesting speeches given by the FCA over the last week or so around diversity and inclusion. So on the 17th of March, the FCA published a speech by Nikhil Rathi, who's the FCA Chief Executive. And that was all about why diversity and inclusion are or should be considered regulatory issues. And there are a few really interesting points coming out of his speech. He says that, there's a strong business case for diversity, and he questioned whether firms can adequately respond to the needs of consumers if they don't have that diversity of background and experience in order to overcome biases and blind spots. He sees the improvement of diversity as not only a matter of fairness, but also a crucial way of strengthening customer outcomes. But I think that the most interesting part of the speech is really how you even attempt to supervise this aspect. And it gets a bit, and this I think is where it gets a bit tricky, and is likely to spark some debate. Mr. Rathi raised a very interesting proposal around extending the FCA's 5 conduct questions to all firms, and then adding a 6th question along the lines of, is your management team diverse enough to provide adequate challenge, and do you create the right environment in which people of all backgrounds can speak up? So this is a much broader, it's broader than just representation, as it goes to the very heart of a firm's culture in relation to diversity and inclusion. And a warning from the FCA, if it doesn't see improvements in D&I at senior levels, it plans to assess how to best use its powers. So we may see issues such as whether the D&I of management teams and the inclusivity of the management culture that they create, that could end up being part of the FCA's consideration of senior manager applications. And that would be a fascinating development, and it would be really interesting to see how far that actually goes. I mean, having just gone on LinkedIn when this speech was published, I read a few of the comments, and already there are some arguing that, okay, yes, businesses must try to diversify their workforce, but it shouldn't be compulsory and it shouldn't be considered a regulatory issue. So I think that it will be a hot topic, but obviously I think everyone is on board, of course, with the general concept. More broadly, we're seeing issues around D&I coming through in a myriad of different ways. And from a law firm perspective, we now have clients who specifically request that certain deals are female-led, and that's not something that I even came across, a year or two ago. So it's a real recent development. And just the day after that speech from the FCA was given, there was a further speech again from the FCA, which focused on their role as an employer and the key steps that it should be taking from a diversity and inclusion perspective. But there was also talk of there being no one size fits all solution, and how the FCA will not be mandating particular cultures across the pool of some 60,000 firms that it regulates. But what the FCA did say is that it does expect firms to be able to articulate their purpose, to talk about how their governance structures drive good decision making. But they want to see the appropriate tone set from the top, and to be able to show that their people policies are effective in driving diversity and inclusion. So it's relevant not just to culture, people and leadership, but it's relevant to integrity, to treating customers fairly, to the pricing structures firms have in place, to marketing and advertising, and also to ESG, which is obviously a hugely relevant topic at the moment, and sort of the strategies around that. So it really does apply across a broad range of subject matters. And for investment management firms in the audience today who are focusing on increasing their D&I, on the 18th of March, I noticed that the Investment Association published a report entitled Ethnicity in Investment Management, Building Positive Intentions into Meaningful Action. So that provides some practical examples through case studies outlining some firms' experiences of initiatives that they've employed to advance ethnic D&I. So worth having a look at that if it's on your agenda currently. And the third kind of core regulatory development I wanted to talk about was some findings that the FCA published around the risks and impacts of new technology. So the FCA found that legacy technology is slowing down implementation of essential digital upgrades, and that's across the FS sector. The FCA is applying greater scrutiny now, not only to operational resilience of regulated firms bringing in new technology, but also to the governance and oversight of the changes themselves. And that, I think, is a sort of additional step that we haven't necessarily seen focus on previously. While the opportunities offered by new technology to leverage digitalization are clear, of course, the process of change itself can present a significant operational risk. If you have service outages, that presents an increased risk to customers who are reliant on those services, and can lead to an increased threat of regulatory enforcement, as well as the obvious reputational risk or risk to public loss of confidence. Unsurprisingly, the FCA identified that firms that had well-established governance arrangements and had effective risk management procedures and a higher budget allocation to implementing these tech changes were more likely to be able to implement them successfully with fewer incidents or fewer serious incidents than those who did not. So I think the report really sends a message that firms need to ensure that they're investing in their operational resilience, that they have these clear lines of senior management accountability and responsibility, and that failure to have adequate systems and controls in place may indeed result in enforcement activity, and that from the FCA, and that could of course include fines. And this isn't just an issue that the FCA is focused on. We're seeing other financial services regulators looking at this issue across other jurisdictions. So, for example, the Monetary Authority of Singapore recently released updated guidance on tech risk management, again, emphasizing the need for strong oversight and governance, but also touching upon the risk associated with third-party tech providers. So it's not just the FCA who are looking at this issue. And finally, I just wanted to wrap up with a sort of what's coming down the pipeline section. So 31st of March, probably on marked on all your calendars, it marks two important deadlines. It's the deadline for FCA solo regulated firms to complete their fitness and proprietary assessments and certify relevant employees, and also to train their non-senior managers and certification regime staff on the conduct rules under SMCR. I think our experience is that all firms subject to SMCR have been putting in place processes to manage certification and to provide that conduct rule training. Last summer, the FCA included a list of indicators on its website, which provides a quite helpful checklist for the review of those processes. 31st of March is also the deadline for FCA solo regulated firm to upload information on the certification staff into the FCA's new financial services directory. So 31st of March is a key date. Also wanted to flag that there have been proposed changes to the FCA's training and competence sourcebook. So those were laid out as part of the FCA's quarterly consultation paper, CP 21.5. Just as a reminder, the FCA's training and competence regime, it protects consumers by essentially ensuring that those working in financial services are appropriately trained and qualified. So the regime includes very detailed requirements for individuals carrying on certain retail activities, including qualification requirements. So what these proposals do is that they propose to extend the scope of the notification requirements, update the appropriate qualifications table, as well as amend the relevant rules and guidance. And I believe the deadline for responding to that consultation paper, if you feel the urge to, is the 2nd of April, so next month. And then just very, very quickly, as I'm running out of time, I suspect, the FCA, so you may recall, actually, I'll go back a bit, that back in 2018, the FCA published a discussion paper which looked at whether a new duty of care was needed for financial services firms, and if so, you know, what form that duty of care would take, how it would be implemented. And at the time, it provoked quite strong and polarized views. And then the work was unfortunately delayed due to the impact of COVID-19. So the FCA has just announced that it's aiming to consult on options for this change this coming May. As you know, SMCI already complements the FCA's principles, for example, by requiring employees of FSMA authorised firms to act with integrity, to act with due care and skill and diligence, and to pay due regard to the interests of consumers and treat them fairly. I think if the FCA also decides to create this new duty, it will represent another significant change, and firms will need to reassess their internal procedures, their rules and their processes to ensure that they comply with any sort of new duty obligations. But it's definitely a developing area, and it's something that should be, you know, should keep an eye on. And that is me. And unless there are any questions, I will hand over to Prianca and Chris, who are going to talk about issues around Brexit and passporting. Thank you.
Thanks, Anna, and once again, good morning, everyone. So, you know, the purpose of Prianca and I's session really over the next 15 minutes is to briefly kind of explain where we are following Brexit from a licensing perspective, and you know, the kind of loss of passporting rights and what firms are doing about that. Looking slightly ahead to now the UK has left the EU, what's the kind of future regulatory framework going to look like? And then I'll hand over to Prianca, who's going to talk through more of the human resource and employment issues that firms need to think about in a Brexit context. So very briefly, you know, before Brexit, as many of you will know, firms benefited from passporting rights, and passporting rights effectively allows a UK authorised firm to provide its services cross-border to its European client base without needing to apply for any local licence. Now, I think it was fairly obvious early doors in the Brexit process that there wasn't going to be passporting rights in any final Brexit deal. But I suppose it was also hoped that there would be some level of kind of market access. But when the final kind of TCA landed, the final kind of agreement between the UK and the EU on Christmas Eve, I believe, there were only 5 pages devoted to financial services out of over 1,200, and there was no, essentially there's no kind of market access rights given in that agreement. So where does that leave firms now, and how are firms kind of, what solutions are firms using to be able to continue to service their EU client base? I mean, the kind of most obvious option, and I suppose legally the cleanest option, is for firms to set up a authorised EU subsidiary in a member state, and then use that EU subsidiary as a hub to passport and kind of provide services to its EU client base. This is the most appropriate solution for firms with a widely distributed and extensive EU client base. But obviously there are costs involved. You have the costs of setting up, resourcing and capitalising an authorised entity in the EU. And that has to be managed separately with its own governance arrangements and so on. The second option that some firms are looking at is whether the UK firm itself can apply and avail itself to local regulatory regimes in different member states. This is different from the kind of the first hub option, in that under this model, the UK firm itself is looking at individual regulatory regimes, and it's applying for a license or kind of a registration in that jurisdiction to provide services. And this is probably a good solution if you have clients in a particular, they're kind of concentrated in particular member states. The benefits of this approach is obviously you don't have to set up a new entity, and often the local licensing requirements can be a lighter touch process than, say, if you were to set up a kind of a separate EU subsidiary. But obviously the downside is you have to take each member state by member state. There are no passporting rights. And quite often what we're seeing in member states, in allowing UK firms to access their markets, there are restrictions on the business you can do, both in terms of the if you call it the regulated activities you can do in that jurisdiction, but also the kind of the client base you can access, and often it's limited to kind of wholesale only business. And I suppose, and I wouldn't quite call it an option, but a third thing we often get asked about in a Brexit context is what about reverse solicitation? Now, reverse solicitation is a concept that exists in some, but not all, EU regulatory directives. And essentially it says, if a service is provided at the exclusive initiative of the client, then we don't, the regulators don't consider that service to be carried on within the EU, and it's therefore outside the kind of territorial scope of EU regulation. The drawbacks of relying on reverse solicitation is, firstly, it is very restrictive, so you can't market new products or services to your clients. Secondly, it's very fact specific, so it makes it incredibly hard to kind of, I suppose on a compliance perspective, but to create an operating framework that relies on reverse solicitation, because individual instances in particular cases can take you outside of the reverse solicitation scenario, and then put you at risk of carrying on regulated activities in a jurisdiction where you don't have a license. And thirdly, again, it's a bit like the second option, and it's very member state specific. So reverse solicitation is interpreted differently by different member states. And, for example, in certain member states like the Netherlands, it's not even kind of available to certain client types. So I think Netherlands has kind of banned reverse solicitation being used in a retail context. But they're generally the kind of the three main models that we've been exploring with clients. I suppose a second, interesting question around Brexit is where do we see the kind of the UK regulatory framework moving now we've left the EU? And I think the fact that there is no there is no kind of trade access in the kind of the TCA agreed with the EU, actually gives the UK flexibility to diverge from European rules and regulations, and kind of use regulation, if you like, to kind of enhance the competitiveness of the UK. There are quite a few different consultations and papers by various kind of industry groups, government, policymakers, and so on this, and they're all kind of interesting in different respects. I think you know, as a kind of first point to note, I don't think we're going to see a kind of slash and burn of existing EU regulations, and I don't think we're going to see a kind of race to the bottom. I think it's accepted by regulators and industry that the kind of VFS sector benefits from having a kind of a robust and mature regulatory regime. But, you know, I think it is recognised that actually regulation, if used correctly, can support innovation and growth whilst continuing to protect customers, ensure financial stability and kind of market integrity. So, you know, just picking up on one of the reports I think is quite interesting in this respect is the recent Khalifa reports. As some of you may be aware, the Khalifa report was kind of procured by the government as to kind of advise policy and to explore ideas of how kind of policymakers and regulators can support the continued success of the UK's fintech sector, which is, you know, seen as a real kind of growth opportunity for UK PLC. The report looked at lots of different ideas, but just kind of, I suppose, for the purpose of this session, focusing on what they were talking about regulation. So the Khalifa report thought that actually regulation, there could be a much more joined up policy-driven approach to regulation. So they advocate having a kind of a collaboration between different regulators when tackling kind of sector-specific issues. So you've got the ICO, the CMA, Treasury, and the FCA and PRA all talking to each other to present a kind of a coordinated solution to an issue. They also explored ideas where actually, you know, a lack of regulation. So I think regulation can often be seen as stifling, but actually sometimes not having regulation itself can actually stifle innovation. So there are, you know, suggestions for the FCA to be more proactive and Treasury to be more proactive in regulating areas such as, you know, having common data standards between financial institutions, exploring this idea of having a digital ID for individuals and corporates to facilitate AML. And then, you know, areas some of you will be more familiar with, so providing greater clarity in AI, crypto assets, and kind of building on open banking principles to broaden out to open finance. And then I think kind of, you know, the last observation I'd have on that paper was talking about having a kind of more principles-based regulation, which is also kind of recognising that firms can pose different risks at different stages of their kind of growth cycle. So I suppose extrapolating some of those ideas explored by the Khalifa report and other papers into what we're going to see, you know, regulation in the UK evolve towards. I think certainly we're going to see a slow divergence from EU rules. I don't think there's any doubt about that. I think we're going to see a much more coordinated approach to regulation, which is going to be kind of guided from a kind of policy initiative, very much at a kind of government level and kind of top down. I think you're going to see regulation be seen much more as an asset, as a tool in which we can, the kind of UK can promote competition and innovation within the sector. We're certainly going to move away from a very much rules-based system, or prescriptive rules-based system, I should say, which is a feature of EU rules in order just to make sure that all member states implement the kind of rules in the same way, to a much more, I think, kind of higher level principles and outcomes focused level of regulation. And I think there's going to be a lot more kind of focus on firms' governance and senior management arrangements to see that through. And then I think we're also going to see kind of more flexibility in how the FCA and the PRA are going to apply regulatory rules to firms at different stages of their life cycle. Perhaps I can now hand over to Prianca to talk more about kind of some of the employment and visa issues that the firms are facing as a result of Brexit.
Yeah, great. Thanks, Chris, and good morning, everyone. So I'm just going to spend a short while just looking at the people side of Brexit and some practical points for HR to consider when looking at the new immigration rules. And as I'm sure you all know, from the 1st of January this year, as of the 1st of January, free movement of people within the European Union has ended. And there's now a new points-based immigration system in the UK, which is designed to facilitate the entry of skilled workers. And one of the main changes for businesses from that is the fact that there's now going to be this new administrative hurdle before recruiting EU nationals because of the potential need to obtain a visa or a work permit. And the same applies to individuals travelling between the UK and the rest of Europe. And obviously before the 1st of January, that wouldn't have had to be a consideration. So overall, the new immigration process is intended to make it easier to hire employees, as there's now a lower salary and skills threshold, and in theory it should be quicker to obtain a visa than it was previously under the old system. But the fact that visa fees now apply to EU employees potentially does make it a more expensive process than it was previously. And as a sector, financial services does rely heavily on EU talent. So the new rules do create an added process and cost to both recruitment and travel that businesses now need to factor in. And on that point, it's worth noting that the direction that the UK government is going in is very much to support talented individuals coming to the UK. And in his budget this year, Rishi Sunak, announced a new fast track visa for skilled workers, and that's intended to support fintech firms, and that was done in recognition of the fact that the fintech sector in particular relies heavily on EU talent, and that was following the Khalifa report, which Chris mentioned earlier. So I think for fintech businesses, that's something to keep an eye on in terms of a visa option that could be beneficial, but businesses will just need to wait to see the detail of that. So looking at business travel then, I think the key point to note from the new rules is that business travel is now just a lot more complex, and there are new rules that apply for UK employees travelling to the EU and EU employees travelling to the UK. So in general, certain short-term business trips are permitted without any requirement for a visa or work permit, such as attending internal meetings, events, conferences. But for other types of activities, such as meeting clients, the individual is likely to need a visa or work permit. And the key factors that businesses need to look at when deciding whether or not someone does need a visa or work permit are the activities, frequency, and duration of travel. So those are the main three factors. And I think one practical thing that HR can be doing on business travel, well, firstly, is to understand what activities are permitted in the UK without having to obtain a visa or work permit. In situations where the business actually just might need to take specialist advice because the activities might be borderline. But also creating a business travel policy can be quite helpful. And that policy, could set out what activities are permissible in each jurisdiction, where advice from HR or permission from senior manager needs to be sought prior to travel. The policy could also set out, for example, the fact that entry requirements and documents needed for travel into the UK is now different. So individuals need to make preparations before they travel. And obviously COVID-19 restrictions still need to be taken into account overall when looking at business travel. If quarantine rules apply, that may just make business travel impractical. Looking at businesses with EU workers, I think a practical thing that HR can be doing on this side, and most might be doing this already, is to consider how to engage with current EU employees in relation to the EU settlement scheme. And so EU workers who have been living in the UK prior to the 1st of January this year can obtain a immigration status to live and work in the UK beyond the 30th of June this year. So that's the key deadline, provided that they apply via the EU settlement scheme. And the 30th of June is an important date because from the 1st of July, anyone who doesn't have a valid immigration status won't legally be allowed to work in the UK, and that can have quite severe consequences on them, because then they'll be potentially subject to the government's hostile environment policy, where their rights to rent accommodation, use the NHS become limited. So in terms of practical things that businesses can do, communicating with employees to remind them to apply for settlement status is helpful, and that before the deadline of the 30th of June. HR support can be through briefing managers to have one-to-one conversations with employees, providing sources of information for impacted employees so they understand what to do. And looking at more widely at recruitment then, I think another practical thing to have a look at is your internal processes and paperwork in relation to right to work checks. And the government will probably publish some updated guidance on this over the next few months. So that's something to look out for in terms of new documents that will be needed for EU workers travelling to the UK from the 1st of July this year. So you'll just need to make sure that all of the internal documents are up to date for those updated documents. And it's also worth checking that offer letters and employment contracts have appropriate right to work clauses. And now, as it's likely that the business will be spending immigration fees on a potentially wider pool of employees, it's also advisable to make sure that your employment contracts have clawback wording, for example. So if an employee leaves employment fairly soon within a certain period, the business has the right to claw back immigration fees, which can be quite substantial. And finally, just looking at wider considerations on recruitment. Now that there's a cost associated with recruiting EU workers, which wasn't there previously, I think this has caused a lot of businesses to look more widely at their workforce planning strategies, in particular, what resources are needed, the cost of recruiting overseas workers, where roles need to be carried out. Do they need to be in the UK, or can they be carried out completely remotely? And I think the important thing here is that decisions taken in that respect aren't discriminatory against a certain group of employees. So, decisions need to be taken objectively and not based, for example, only on the cost of hiring foreign workers now. So I think it's important to have objective rationales if businesses are changing hiring and working practices. And finally, just overseas working does lead to wider considerations, in terms of potential liabilities that could arise, tax implications, compliance with local laws. There could be a requirement to set up works councils in certain jurisdictions, regulatory compliance, how to ensure supervision under the senior managers regime, and so on. So I think there's a big question for businesses going forwards in terms of how they recruit and structure the workforce in light of the new immigration rules and those wider risks. And I think HR have a big part to play in those conversations. So that's everything I wanted to say on Brexit. I think I hand over now to Olivia.
Thanks very much to Anna, Chris and Priyanka. Lots to think about there. So in this final session of the day, the last 15 minutes, we're going to be looking at the thorny issue of where we stand in relation to employee vaccinations. So what you can or can't do, what the key issues you should be thinking about, and what we're seeing in this respect within financial services. So just to start with a little bit of scene setting, we have just seen a record-breaking vaccination streak in the UK come to an end this week, with around about 30 million of us now having had first jabs. Over the weekend, NHS England reported that the vaccination rate was 27 for every second. That said, the rollout looks set to slow down now. So if you're like me and in the over 21s category, aka 40 to 50-year-olds, then we may not be getting our first jab in April, with the focus being on rolling out second jabs. So at the same time as inroads are being made into the vaccination programme, attention is also turning to the government's roadmap out of lockdown and what this means for a return to workplaces. And the government have told us that they are going to issue new guidance before we get to June around the how and the when of a return to work. But it's certainly looking like a large-scale return won't happen until after all limits on social contact have been lifted. So at the very earliest, the 21st of June. And a lot of businesses that we're speaking to now are still fairly tentatively planning a return to work around about autumn time, but all cautiously so, waiting to see what the government and the guidance say in due course. So where does this leave employers? We're advising our clients on a number of questions around the vaccination programme. So we're going to have a look at these and hear from Phil and Tom about how this is playing out in their experience. So the fundamental question really is, can employers require their staff to be vaccinated as a condition of returning to work? And you've probably seen there's been a really big stir around this issue in the press, with the likes of Barchester, Pimlico plumbers leading the march of employers mandating vaccinations. And business groups have been really vocal in saying that this is the direction of travel they want to go. There was a leaked paper yesterday suggesting that the government are also considering making it a legal requirement that care home workers take the vaccine. And then rumours quickly started to circulate, which were fairly quickly quashed, that this requirement could be further reaching. So the key point here is that these cases are very much the exception rather than the rule, and actually are likely to face challenge. The bottom line is that it is going to be very difficult for office-based professions like ours to mandate vaccinations as a back-to-work requirement. And this no jab, no job approach, which is what it's being termed, is going to be a dangerous approach to take. And there are three key reasons why. It's linked to the fact that participation in the national immunisation programme isn't compulsory, unlike in, for example, France and Italy. There's insufficient evidence about the effectiveness of vaccinations to prevent or reduce transmission. And doing so would also highly likely result in legal claims such as human rights claims or discrimination claims from people who object to vaccinations on religious grounds because they don't believe in intervention, or on ethical grounds because of, for example, ethical veganism, or medical grounds because they can't have the vaccinations at the moment, such as pregnant women. So at the moment, the key messaging is vaccinations do not replace, and there's no suggestion they will anytime soon, COVID secure measures. And the focus of the government continues to be on, you'll remember that 5-point charter for employees as we move towards a return to work. So carrying out the COVID risk assessments, sending those out to employees, having in place social distancing measures, taking reasonable steps to ensure that at the moment people, where they can, continue to work from home, regardless of whether they've been vaccinated or not. In relation to those COVID secure measures, the government are also still consulting on whether they can be lifted in light of the vaccination programme. And again, we're expecting that outcome to be delivered before the 21st of June. So Phil, throwing this out to you, how does that align with what you're seeing within the sector generally, or within your own business in relation to the proposed approach to mandating vaccinations?
Morning, everyone. Thanks, Olivia. Yeah, pretty much in line. I think tentative is the right word. Interestingly, the question of vaccinations was raised. But then I think the reason you then need to think about is, well, why would I want to, if I could, insist on people being vaccinated? For sure, it protects the individual. So you can understand why there's this move around potentially healthcare workers being vaccinated. But you know, I sit in an office all day. I'm not coming into contact with the general public. I think there are other mitigations and risk controls that people can put in place that don't go anywhere near vaccinations.
Thanks, Phil. So moving on from that, the other question that we're being asked a lot at the moment is, instead, can employers ask if staff have been vaccinated as an additional safety measure, or can they encourage or incentivize staff to be vaccinated? So the simple answer here is, well, yes, you can ask the question. At the moment, there's no specific law that stops you from doing so. But, and this is the big but, there's also no legal requirement for employees to actually answer the question. And because of this, your options for recourse are fairly limited if they actually refuse to answer. So whether you can actually do anything at all if they refuse to disclose that information comes down to whether your ask is a reasonable instruction, and that's going to be fairly fact specific. We do know that some businesses that we're talking to now are starting to think about collecting this data as part of their back to work planning, and they're very much thinking, well, this is a reasonable ask, so that we need this information to enable the safest possible operation of the workforce. The problem at the moment, and why we think this is open to challenge, is still we're in the position where there's a lack of data relating to effectiveness of the vaccine. But this may change, and the position of businesses in collecting this data may become more justifiable further down the line as and when effectiveness becomes clinically proven. We've also got to remember the data protection side, and the ICO have had something to say on the issue. And they've suggested that you'd need really compelling reasons to collect this data. And the examples they give are more employees working in settings where, for example, they're coming into touch with the clinically vulnerable or people infected with COVID. So those in health or social care settings, rather than in our sort of scenario where we'd be collecting the data for monitoring purposes. So we're not really in that ballpark, and I think at the moment it's a really high bar for us to pass that necessity threshold. To have absolutely any chance of being able to do so, it's really critical that you are able to demonstrate how that fits into your wider risk assessment. So an absolute must would be conducting a data protection impact assessment and really focusing on business specific justifications. But in short here, I really wouldn't rush at the moment to start putting in place policies or procedures to collect vaccination data. I would wait and see how this plays out as we head towards June. So just touching on the incentivization point, absolutely you can incentivize vaccinations, but, and this is where you have to be a bit careful, you can't subject employees to a detriment if they don't get vaccinated. So incentives could be things like paid time off work to get vaccinated, or paying for employees to actually receive the vaccination, but you couldn't, for example, give £100 financial bonus for employees who do get vaccinated. That would be seen as a detriment to those who don't and could lead to discrimination claims. Equally, you can start to take steps, and a lot of our clients are doing so, to encourage employees to be vaccinated, and we're helping with putting in place vaccination policies and guidelines with the purpose of minimising health and safety risks. But again, you have to be careful not to be seen to be directing employees to receive the vaccine, because if you do direct them and then they suffer an adverse reaction, there's then a risk of a claim against the business for personal injury. So we do have to be a bit careful there. So Phil, back to you. What's the mood music generally out there or within your business in relation to collection of vaccination data? Is this something people are thinking about doing?
Zero desire at the moment to do that for those reasons that you described and others. I mean, one that struck me was what we'll actually do with the data and the cost benefit of actually collecting it, recording it, doing the impact assessment. I'm not sure it's actually worth it, as well as all of the legal issues it potentially throws up. So it's not on our agenda at the moment. Yeah,
and that's the message that we're generally hearing pretty loud and clear at the moment. So that leads us on to look at, well, as an alternative, if we're not doing that, can we instead ask for people to COVID test before returning to work? And the answer here is, in theory, yes, but the issue is more of a practical one in actually being able to get your hands on those lateral flow tests. So at the moment, it's not something that we can use across the board as a way of getting people back into office environments. So the government's offer of free test kits to work places, you may have heard, has been extended until the 30th of June. but this is only for staff who cannot work from home. So it may be that you can access test kits via the government website for the testing of core workers who are critical to have in and can't do their jobs from home, but you won't be able to tap into it more generally than that. You know, we've got to bear in mind that these supplies really are aimed at the likes of teachers, care workers, shops when they reopen, rather than people working in office-based environments. If you are needing to tap into this, also just bear in mind that you need to register on the gov.co.uk website by the 31st of March. At the moment, you also can't purchase the test privately, but as and when they do become available commercially, a bit like with the flu job, then this is something definitely you can do. And it may be helpful to think about doing so to pick up people who've been missed out with earlier rounds of vaccinations, such as those who are pregnant. If you are reimbursing employees for the cost, you should just think about things like having a set cap in place, because different providers will be offering it at different prices. That said, we understand the base price is fairly low, but still a bit of a difference. So Pfizer is £15 and Oxford test £3. Also remember the data protection requirements if you are handling health data, the usual I's to be dotted, T's to be crossed on that front. But again, it's another area where we're very much waiting to see what the government will say about the role testing will play as part of the general move back to workspaces, as and when this is green lighted on the government's roadmap. Phil, just final word from you. Any insight in terms of what is being thought about in respect of COVID testing?
Yeah, I think it's around that ability to keep the workplace safe. We're doing all we can to focus on that. Where people can work from home, they will do. As people start to return to the office, and we've had a few, but as that number starts to increase potentially later in the year, I think the key will be around explaining what we're doing and why. And I think things like testing and temperature checking, there is a question mark over their accuracy, but if we could potentially make those things available for people, if it will reduce their level of anxiety and make them feel safer, we are definitely considering doing that, but it's not something that we would consider mandating.
Thanks very much. So Tom, last word to you, I think, today. So all of this talk about vaccinations obviously comes at the same time as we're closely and intently studying the government's roadmap out of lockdown, and starting to think about how, when and if we're going to be able to get our employees back into physical workspaces. How do you think all this talk about vaccinations and testing fits into the bigger getting people back to work picture?
Well, I see this as part of a broader context of change in the HR and compliance world. And, you know, we've had now 5 quarters of more unprecedented change than we've ever seen before. Every quarter, a new thing, a new idea is thrown to us as HR professionals and compliance professionals, and we need to address it. This quarter's issue is vaccination and other elements as well. We've had Anna, who's talking about the need to cater for vulnerable customers and vulnerable employees, and that's a significant change to the way HR works. We've had Chris, who's told us about setting up new entities in different countries to resolve some of the Brexit problems, and that is a significant change in HR functions. We had Prianca, who's talked about new processes required in hiring, new checks which are required for hiring new employees, particularly from different countries. And then, of course, Olivia, you've been talking about vaccination. What I see is a context of very significant changes to the way HR needs to deliver its service to our financial services companies. And at the time to re-examine that for a period in which I think we're going to continue to see continuous change to the way those processes need to be applied, the way those processes need to adopt a flexible approach. We're so used to a world of setting up HR and compliance processes, which we then run fairly much unchanged for year after year after year. And our clients, or what we're seeing throughout financial services, is a need now to look at HR processes again, and indeed the technology which supports them, and to make them more flexible, more able to adopt and deal with the week on, month on change which is occurring. So I think that the amount of change we're talking about this year, after what we all know are a couple of years of very significant change already, I don't think that's going to decelerate. And I think our mission as HR technologists and HR transformation orientated people is to re-examine our HR services and look again at how best to make them flexible for what I suspect is going to be a lot of change further on this year.
Thanks very much, Tom. So I think it's been a really interesting session this morning. I think we all agree lots to think about. As our first one, it's flown by, but we look forward to joining you again at the next session.
Yes, thank you everyone for joining us, and thank you very much to the speakers. As always, we've run out of time. Our next session will be in June. I'll be working with Olivia to bring something just as relevant to all of your agendas for the next quarter. So with that, I look forward to seeing you in a couple of months' time. Thank you.